Lots of traders lose money not because they had a bad trade idea. It's because they used the wrong order type in the wrong time. Different type of traders use different type of orders. Day traders use different orders than swing traders. Aggressive traders use different orders than conservative traders. In this video, we're gonna unlock a skill that separates beginner traders from real traders. We're gonna dive in major order types with their pros and cons and how to use them, where to use them. By the end of this video, you'll learn exactly how pros control their entries, their exits, their risk management. So let's dive right in. Hey, my friend Zach here, and welcome to the world of investing. Whether you're a new trader or a struggling trader or a new investor, this channel is specifically for you, so subscribe and let's dive right in. So let's start with the fastest trigger. It's called market order. Market order is like telling your broker, get me in now with the best price possible. And that's basically hitting the ask on level 2. And by the way, if you haven't watched video level 2, I'll leave it in the description or by the end of the video. It's very informative. There's information that none been said on YouTube, so go watch it. It's really helpful. So what's the pros of market order? Fast execution. It's good for high momentum plays. It's good when the market is moving fast and you must get filled, whether you're exiting or you're entering or something like that. The cons of market order is slippage, and sometimes nasty slippage. For those who don't know what slippage is not getting filled on the price you asked for. Day traders usually use market orders, not all of them, but sometimes they do. Swing traders, they almost never use it. Do I use market orders? I rarely use them, maybe 5% of my entries, and maybe 5% on my exits. I'll explain later why. But when would I never use market order? On which plays? Plays that are very, very volatile with big spreads. Because you're buying the ask and there's a big spread between the ask, you're right away in the minus. On stocks that are actually halting to the up or to the down, I never use market orders. So who usually uses market orders? Usually aggressive traders use market orders when they're trying to get in at the break of a level to the upside or to the downside if they're shorting. At the break of the level, they use market order to get in right away. And yes, there is slippage, but they get in. For me, I'm a conservative trader. So I get in when the market is pulling back to a certain level. And that gets us, guys, to the next order type, which is called limit orders. Limit orders, basically you're telling the broker to get you in at a certain price or better. And what are the pros of limit orders? Maximum control, no surprise fills, great for planned entries and dips. And what are the cons of limit orders? Sometimes you might not get filled, and it requires patience. Swing traders love limit orders. They use it all the time pretty much. Day traders, they use it on pullbacks and buying dips. So do I use limit orders? Absolutely yes. I use limit orders when the price is pulling back. I put my limit order to a certain area to get filled. It's when it's pulling back to a certain level. And it gets me filled at that price or sometimes even a better price. But I have to be transparent with you about two things. I'm gonna say two things. Sometimes I don't get filled by 1 penny or 2 pennies. And that drives me crazy. It drives me crazy. And sometimes it gets partially filled. So I have a 500 shares to buy. It's my order on 500. I only get filled at 180 or 80 shares or 50 shares or 200 shares. And guess what? Right away, it goes the way exactly as you planned. It drives me crazy. It burns me inside, guys. But that's the funny question here. How many times did I not get filled, or I got partially filled and it did go against what I expected? It was supposed to be a loss when I didn't get filled. Do you know how many times it happened to me and I went, thank God I didn't get filled? 0. Yeah. You're looking at me. 0 times. and you tell me it doesn't piss you off, I just wish it happens once, at least to get it out of my system and say, oh, okay, sometimes it's worth it not to get filled. But it never did with me. But it's okay. I learned how to manage. I learned how to adapt. It's okay. But I thought I'd share that funny thing with you. So when do I never use limit orders? On my stop loss. I never use limit orders. On my stop loss, I use stop market order. It's called stop. And what is a stop order? It's basically you're telling the market, or you're telling your broker, when it hits that certain price, trigger me at a market stop order. So it stops you at, it exits you at the bid right away. So what are the pros of our market stop orders? It's essential for stop losses. The second thing, it protects you from catastrophic moves. The cons of this is slippage. It can fill you at a way lower price, but remember guys, if it's fast and it fills you on a lower price, it could have been worse. Day traders use it a lot on their exits. And swing traders, they also use it a lot on their exits. So how often do I use this stop order? 95% of my trades, or even more, I use that type of stop order on my exits, on my day trades and my swing trades. And the 5%, I use a market order out. Sometimes I get a signal that I need to exit the trade early. So I cancel the stop order that I have and I just market order out. But majorly, if my trade is planned, I usually use stop orders unless I need to exit early. The next one is the stop limit order. And the stop limit order, basically you're telling your broker, trigger the stop at this certain price with a limit order. So basically with a limit to control your fill. So you're triggering, the stop loss triggers at a certain price and it has a limit to control your fill. What are the pros of it? Less slippage and more control than a regular stop that I explained before. The cons, warning, your stop might not get filled. It might bypass the fill area that you needed and it goes way below and you're not filled. So your protection may not work, and that's why I never use it. Day traders usually avoid this type of order. Swing traders, some of them use it. And for me, I've used it when I first started, but now I almost never. The next one is trailing stop orders. So a trailing stop order, basically it moves along with the trend. And usually traders use it for taking profit. Basically what you're telling the broker is, I want my stop to be 1% different from the high, okay? So it calculates the highest it gets and then 1%. You can set whatever the percentage you want or the dollar difference that you want. Some people put it 1%, some people put it 0.5%, some people even put it $1 or 50 cents or whatever it is, whatever your plan is and your trade is, okay? And it keeps, you see how it keeps going up and down, up and down, up and down, okay? So basically your stop keeps going up as long as the stock is going up. And then it goes down. If it triggers it, you're out. If it doesn't, it goes up, it follows. It follows. The pros is pretty much you're trying to catch the bigger amount of the trend. So you stay longer taking profits. It's better for profit taking. I can summarize that with you let the winner run. And the second pro, you remove emotions because you're letting it do its thing. And the cons of it, first of all, it's not ideal for scalping. The second thing, you might get out of the market with a small extra pullback. You get cut off and then it keeps going. So that's the second con. Swing traders use it to follow the trend. They use it, some of them they do. And day traders, sometimes they also use it to follow a trend on a winner. Do I use it? I use it maybe, I can say 5% of my time. I usually plan and I put my limit orders up and I collect my profits as they go. But sometimes when I have to leave the trading station, I might set a trail and I'm already in a winner. I'm already collected some of my profits. I might set it as a trail stop and leave my trade station. It happened to me a few times. I came back, I found out I got shaken out. And sometimes, no, I got a good runner out of it. The next one is the OCO. Basically, it's one cancel the other. And I call it this set it and forget it kind of order. So it is a mix of stop loss and profit target. So you're telling the broker, that's my profit target of that amount of shares, and that's my stop loss at the same time. If one of them triggers, the other cancels. You know, the pros of it, some beginners, they use it. Another pro is it's stress-free. The second one is it's an okay automation kind of trigger. The cons is it's not supported by every broker. And the con number two, it can be confusing sometimes at first, but then you'll get used to it. So do I use it? Sometimes I use it in my swing trades. In my day trades, I have used it, but rare, and I don't like it. It's not part of my day trading system and not part of my swing trading, but I have used it, and I've used it more often on swing trading, especially when the market haven't done its move or it's consolidating. It made its first move, I took my first profit, and it's consolidating. I just leave it, I put the orders in and I leave it. Sometimes it happens. Now is the bracket order, and I call it the 3-in-1. So basically you're telling your broker when to enter, at what price you're entering, and it fills, that's my stop loss and that's my profit target. It is a stress-free kind of system. Your trade has to be planned. It has to be planned in order for you to use this. The pros of it, it's good for new traders. It manages your risk better, like risk, stress-free kind of thing. And you can call it clean and structured trading pretty much. The cons, at the other hand, less flexibility in active trading. And it's not ideal for fast changing condition. Day traders use it less than swing traders, but swing traders use it more often than day traders. And the question is, do I use it? I can tell you I've used it before just for trial and just to know what it is and how it works. But other than that, I can tell you almost never. And the reason is because I have a tier system in trading. So I tier out of the position bit by bit, 25%, 50%, 25%, or 25, 25, 25, 25, or sometimes even 50 and then 25 and then 10 and then, you know, it depends on the condition of the stock and the play and what are the signals. So I manage my exit differently. So it doesn't work for me. It's not for my trading style. However, when I used to use interactive brokers, they used to be able to let you get out in tiers. And I've played it many times when I used to have an account with them. It sets my stop loss. It's a bracket order, so you tell it, this is my stop loss, this is my entry, and this is my take profit. As soon as it fills you in, okay, it allows you to cancel some of your take profit shares and put another order in. And you cancel a little bit and put another order, and then you put your trail out. And if it stops out, it cancels all of them. But I only used it I did use it actually for a while for swing trading. I never used it for day trading. I never liked their platform. But yeah, I have used it, but now I never use it. So those are the main order types. But we can't forget about the duration of the orders. So we're gonna go over a couple of important duration of the orders. Guys, if you find anything like this video is informative, please hit the like button and let it pass to the other struggling traders that wants to learn about market order types. Also, before I start diving into the duration, I just want to tell you there's way more orders than that, and those are the major ones. There's a lot of brokers have different orders I've never used, and I don't think it's worth even mentioning here. If you have any order type that you want me to go over, please put it in the comment down below. I'll make a short video and I'll send it to you, or I'll publish it. So the time control about those orders, there is something called GTC. It's good to cancel. Basically what you're telling the broker is, I'm placing this order, don't cancel it unless I do. So it stays there. And that duration, I personally use it for all my orders, whether it's day trading or swing trading. And the big reason is because I don't forget to cancel my orders if I need to cancel them. I'm like, this is my business. This is my bread and butter. So I do my living off of this. So basically I can't forget like these kind of things. And the second duration is day order. And the day order is basically good till end of the day. So it cancels by itself at the close of the end of the day. Some traders use them, but it doesn't really make a difference. If you're the type that might forget your orders, use it. At least it'll lock you, like it'll cancel your order at the end of the day. It does not carry it to the next day. And there is something called extended hours orders. So every broker has a symbol for it, a separate symbol, but you can only use it for extended hours. Some brokers allow you to trade after market, and some brokers allow you to trade pre-market. You need to use these kind of, but every broker is different. And I use mine only when taking profit after hours. When I'm in a swing trade, usually I open my trading station way earlier and I stay after market just to see how it's acting. And sometimes I need to exit or I need to take profits. I use it. Final advice, guys. Pick your order types based on your trading style. Again, if you feel this is informative, please hit the like button and I'll see you in the next video.